So much for having me here. So what I'm going to tell you about today is a little bit about Starling Bank and what we're working on, as well as the fintech ecosystem and some of the changes that we're seeing today. Before I begin, can you raise your hand if you've heard of Starling Bank before? Okay, good, so a good number of you. So Starling Bank was founded in 2014, and it really started with this premise, that until now, people haven't experienced the same technical innovation from banks that they've benefited from everywhere else in their lives. So our exec team is split between people with a rich career in banking versus people like myself who have come from technology out of San Francisco. And really what we saw was that up until 2008, banks had been pretty good at keeping up with technological change. All of that changed in 2008, however, because of the financial crisis. So all of a sudden, these new rules and regulations were being imposed, fines were being levied, and this gap started to emerge. Because what happened was at that same time, some of the most transformative innovations came to market. So if you think about it, that's when the iPhone came out, and then Uber, and WhatsApp, and Airbnb. So this gap between what banks were offering and what consumers were starting to expect, particularly in terms of user experience, was starting to emerge. And so we were founded on the idea of bringing that type of innovation that you see from consumer technology companies into banking. So we are a mobile-only bank. We have no physical infrastructure. We deliver the retail current account. We do things that you would expect banks to do. So we're a fully licensed bank, so we insure funds up to £85,000. We offer a MasterCard debit card. You can do direct debits and faster payments. We give interest on deposits. We have an overdraft, all of that fun stuff. But what we were doing when we started the bank was really looking at the pain points people have with their bank today. Because if you talk to a product manager at a bank right now, they'll probably talk to you about interest rates. And while that's interesting, if you talk to a product manager at a consumer tech company, they'll talk to you about how do you understand your customers' problems and solve those in delightful ways. How do you collect and present data? So for us, what that translated into in banking was just the first time use experience, opening a bank account. So what we saw was that a lot of people would say that just opening an account could take 6 to 8 weeks. They'd have to make an appointment at a branch location, go in, fill out documents, bring in all of these sorts of proof of identity, and it was a fairly friction-filled and painful process. So one of the first things we did was focus on making it so you could set up a bank account, a full current account, on your phone in less than 5 minutes. So that's just putting in a few pieces of information, taking a picture of your passport, and recording a short video of yourself. Then starting to move beyond that into some of the other types of innovation that you can do once you have new technology and new and more interesting ways to use data. So one of which was spending insights. I'll show you a visual of what this looks like soon, but it's how you can help give people more information and clarity into what they're spending and how they can make better financial decisions. Granular card control is really how you can have better security around your card. So in the app, if you lose your card, you can simply go into the card portion and click lock. When you find it, you can click unlock, or you can order a new card. You can also set parameters around if it's available for ATM use, online use, or only in person, things like that. And then most importantly, what I'll be talking a lot about today is open APIs and our developer platform. And what that means for this data sharing economy that's partially pushed by regulation, such as PSD2 and open banking, as well as market shifts that we're seeing. So for those of you who haven't seen it, here's a quick visual. On the far left is the home screen. It's what we call the pulse. It gives you an overview of your daily spending. The second is the transaction screen. So with Starling, one of the other pain points we found is that as customers spend on your card, you typically don't get that transaction in your bank until 2 to 3 days later once it's been processed by your bank. So you never had a real-time view of your spending. So we automatically update the transaction feed in real time as you spend. The third is the card control screen. As you can see there, the locked button is set. So that's how you can easily lock and unlock your card. The fourth is the overdraft. You can see there that you have a toggle to basically be able to manage that ongoing in an easy way. And then finally, the last screen is what's called the current account switching screen. It's showing an approval for a current account switch. What that means is if that you're using Starling, but you currently have an account with another bank, then all you have to do is enter in your account number and sort code for that other bank, and we'll switch over all of your funds, all of your direct debits, and close the other account automatically on your behalf, should you choose to do so. This has been the timeline for implementing that. So as you can see, we started in 2014, but for building a bank, it's very unlike any other fintech or tech product because you have to get a full banking license to offer a bank account. And what that means is that you have to build the infrastructure, you have to raise the funds, all pre-launch and pre-revenue. So we spent our first 2 years really building out the back-end infrastructure, believing that the back-end technology is a huge differentiator for us and not just a commodity, because it would give us more ability to build in the types of innovation we wanted to move at speed, and we wouldn't be relying on someone else for our back-end infrastructure. So spent our time doing that, as well as getting the banking license. And as you can see, in January of 2016, we raised $70 million in our first round of funding. We received our banking license last year. You have to operate under restrictions for the first 6 months. That's really so the regulator can go through and test your systems and ensure that you maintain the security and integrity of the banking ecosystem before they grant you the same privileges as the other bank to accept deposits. Then we received that and we launched this year. We had concurrently built out all of our APIs so that fintechs could build on top of the Starling infrastructure. So we released both at the same time in the spring of this year. And then since then have been working on additional features like our savings, what we call savings goals, as well as the spending insights, Android Pay, Apple Pay, and so on. So to kind of give an example of what this looks like. Yesterday, when you thought of understanding your transactions, your spending history for a month, what you might think of is this bank statement that comes in a physical envelope at the end of the month that kind of gives you your history. What it looks like in Starling is instant notifications as you spend. So you can get it on, if you have a smartwatch, you can get the notification there as well. And on your phone, what you can see here on the right is a description of the transaction. You can see the Google map in the background, which shows the location of the transaction, as well as information as to when the transaction took place, the amount, how much you'd spent at that merchant this year. Additionally, these are the spending insights that we've started to build out, using data increasingly to help customers understand their spending. So on one side, what you're seeing here is the merchant, so how much you've spent at TFL versus Pret versus any other particular retailer. If you were to toggle to the category section, that breaks it down for groceries, shopping, petrol, so on and so forth. What we can do is we get an increasingly large amount of data, and we become increasingly intelligent about how we can use and analyze that data. We can also start to ladder this up to an FCA-compliant affordability assessment, which means that as a customer needs to access other financial products, we can pre-approve them for things like lines of credit based off of the data we already have, which means that essentially they have to fill out less forms in order to access other products. So yesterday, traveling with a debit card. So previously, what the experience would be is that if you're going to go abroad, you needed to inform your bank. You needed to let them know where you're traveling and when, so that they wouldn't suspect fraud on your card as you traveled. Now what it looks like with Starling is that we can automatically, authentically realize it's you that's traveling, and one of the next features we're working on is being able to tell you proactively, welcome to this country, this is the exchange rate. So switching that model from reactive and unintelligent, not knowing which transactions are authentic versus not, versus being able to clearly understand when a user is authentically trying to make a transaction, and being able to proactively give them helpful information to help them in that process. But more than that, so we're a bank with APIs. This means that data and the connections between Starling and other applications is at the core of our strategy. Part of the reason why you've seen new regulations such as open banking and PSD2 come out is because the Competition and Markets Authority, the CMA, did about a year-long industry-wide analysis of banking, and they found a few things. So one is that about only 2% of people switch accounts. And the reason for that, they found, is that the banks are structuring their current products in too complex of ways, their fees in particular in too complex of ways, for people to really understand what it is that they're having to pay. More so, it makes it increasingly difficult for that customer to understand where they could pay less or where they could get a better product or service. So the regulator in the UK has mandated that banks open up these APIs, saying that the banks don't own the customer data, that the customers do, and they can securely share that when they choose to do so, and it's up to the bank to help them to do that. And part of the reason is because the way that traditionally banks make money is they incentivize you to join with a loss-making introductory offer on the current account. So cash back on spending, or cash lump sum, free travel insurance. But the way they make money is by upselling all these other higher profit financial products you see here. Credit cards, insurance, mortgages, wealth management, so on and so forth. So when fintech started to come up and focus on each of these areas and serve really amazing products, better than what the banks could offer, it was a huge threat. It disrupted their revenue streams, and they were afraid that it would start to nip away at their customers and the revenue that they had internally, which is why they basically had this view that they own the customer data, and if the customer wanted to share that data with one of these fintechs, it would violate the terms and conditions on their account. They wouldn't enable it. So that's why the government has come in and tried to increase competition innovation, saying that these fintechs are providing great service, and it's up to the bank to simply help customers securely share that data should they choose to do so. So at Starling, we have a very different view. So instead of trying to build out all of these different products and reinvent the wheel, what we're doing instead is creating a marketplace, which means that we're focusing on what we do best, the retail current account, while integrating in the fintechs from across the market into this marketplace to give our customers choice and transparency around their options for other financial services. So typically, though, if you think of a marketplace, you'd probably think of something like this, or something like Borough Market. It's a place where you have a number of different sellers selling their goods. They love it because typically they'll have a number of different people there to buy their goods. And customers love it because they have a wide variety of options of things to buy from. But this kind of a model, where the marketplace is just a platform with different people selling their goods, wasn't possible in technology. So what you'd see is one company would be very heavy, very vertically integrated, performing all the different functions. They'd be every seller in that market. Until now. So with APIs, the advent of APIs has meant that the way that software is created and brought to market has fundamentally changed. You don't have to reinvent the wheel. You don't have to build out each piece of functionality. Instead, you can strategically integrate in other pieces of financial services into your offering. So typically, an old form of banking, what you might come to think of today is a site like this. So it's one bank providing all of these different products. So you can see banking, loans and credit, insurance, investing in management, wealth management, so on and so forth. This slide, it's very likely you've seen it before. It's shown all over the world at conferences to illuminate what's called the unbundling of banking, or the disintermediation of banking. And what it's showing is each of the fintechs that are now competing with each of the bank's offerings. And what it's showing is that these fintechs are founded with a vision of solving one thing and solving it exceptionally well. And they'll look to solve it and provide not only a better price, but a better user experience. It'll usually be on a mobile app, and it'll be very easy for a customer to use. And so at Starling, instead of trying to compete with all of these different fintechs and all of the incumbents and all of these different offerings, and building out that full horizontal feature set of retail banking products, what we're doing instead is creating a marketplace where each of these different fintechs can plug in, and then helping our customers to be able to compare those and choose which one is right for them. What this looks like today, to give you an overview, we've just started to release this and launch this within the app, is the marketplace here. And then you can see a number of different categories: loyalty and receipts, charity, savings and investments, bill management, and so on. And what you can see on the far right-hand side is what looks like an App Store description page. So this is how you can view your options and then connect to other products in the marketplace. What you don't see here additionally is another page where what we do is we build out a dashboard for each category of provider. So what that means is we build it once, and then if a fintech is in that same space and they have the APIs to show the data, then they can simply plug into the marketplace and provide their products as well. So making a very scalable model such that our marketplace has choice. It's not just 1, 2, or 3 options per each category, but it can scale to hold a number of different providers to give customers that choice or a range from across the entire market. So it's a fundamentally different experience. It's for a smartphone generation. It's mobile only. We don't have any branches. We are focused on making the banking experience as frictionless as possible, as easy as possible, meaning you can do things like setting up an account in minutes from your phone, making payments very easily, all from within your mobile device. We offer contactless card, digital wallets, easy ways to control, manage, and spend your money, thinking again about the overdraft that we offer there and easily managing that, as well as the card control options, and then leaner business models. So because we are a bank, we have a few different ways of making money. Oftentimes when I give this presentation, one of the questions that will be asked afterwards is, how do you make money? And the answer to that is threefold. So as a bank, we take in deposits and then we can lend those out. Currently, the lending manifests itself in terms of the overdraft that we provide. That makes up what's called the net interest income or the net interest margin. So because our operating costs are so different from a typical bank, we have no physical infrastructure, no branches, that alone can get us to be revenue generating. So the current account is sufficient for us as a bank to generate revenue. However, we also have two other key ways. So one of which is, as a licensed bank, you have a unique privilege to plug directly into payment schemes like Faster Payments. So Starling was the 13th member of Faster Payments. But what that means is that whenever another fintech or European bank needs access to this payment scheme, they have to go through someone. And the traditional options are quite expensive and quite slow to get access to. So we have another portion of our offering where we simply enable other fintechs and banks to access payment schemes, and we get revenue from that as well. And the third will be the marketplace, which is a fee that we'll charge to each person who's in the marketplace to be able to sell their goods there. Initially, it'll probably only be whenever someone takes up a product through our marketplace, and then that may evolve over time to just be a standard fee just to simply plug in, kind of almost the traditional marketplace model as well. So I hope that gives you a good overview. If you're here afterwards and have any questions about what we do, what our APIs are, the marketplace, feel free to come find me. Thank you.